And now, it's time for your Low Country Real Estate Market Update.
Good morning, Charleston, and welcome to another edition of the Brian Beatty Real Estate Show here on the Big Talker, 1250 WTMA and WTMA.com. Thanks for joining me. Man, we have a lot to discuss today. If this is your first time joining this program, I've been doing, 12 years now, I think I've been on this program, helping you guys better understand the housing market, not just here locally, but, we bring in information from regional and national news to determine how that impacts us, if at all, here in our little slice of heaven in the Low Country. I've been selling real estate for basically 20 years. I've sold about 1,500 properties, about $1 billion worth of real estate here locally. And so I share my insight as a top agent to help better inform you, the listener, the public, on trends within the marketplace so that you can use that information to your advantage, whether it's, holding off on doing something real estate related, accelerating your timelines real estate related, and then just general knowledge on how to buy, sell, invest in real estate. Today, though, I want to talk about two major things. Number one, I want to talk about housing market policies under Trump or Harris, right? Is this going to be a real estate boom or is it going to be a real estate bust? And then we're going to talk about whether we are approaching a real estate market crash. If you just Google real estate information, everyone's kind of waiting for there to be something negative so that they can report on it. There's an old saying in media that if it bleeds, it leads, meaning the worse the news is, the more people latch onto that, right? And so you've had doom and gloomers over the past several years, kind of watching, waiting, kind of calling and then prolonging their opinion that the real estate market is on this precipice of a burst, this bubble that's going to burst. And so I want to get into that. I want to talk about that. I want to, of course, relay that to our local market, what's happening here locally. And I will just say very quickly before we get into all of this, because I've got a lot to cover today. Our market is an inbound market. We will feel the effects of a tighter real estate market last, or we will be one of the last locations in the country that will, quote unquote, feel a depression in the market, so to speak. And we'll also be one of the first to bounce back because we are an inbound market. People love Charleston. There is no shortage of accolades to substantiate that claim, by the way. Just look it up if you're not from Charleston. If you are, then you know exactly what I'm talking about. And that's evidenced by how much longer it's taken you to get from point A to point B, all the folks that have come here over the past several years. And it's a true melting pot these days. So without further ado, we're going to get into, I think first, whether or not this housing market is positioned to crash again, right? Because we all still have some scar tissue from the 2008 crash. And of course, we have completely different issues that are surrounding our market now compared to the crash that led to 2008 with subprime lending and everything that happened there, right? We also have significantly less homes for sale. So we're going to get into that in just a minute. I will say quickly, though, before I forget, for those of you that are thinking about making a move, you're thinking of buying a home, selling a home, and investing in real estate, maybe you have a property that you'd like to have us manage for you professionally, feel free to give me a call. My number is 843-800-0065. That's 843-800-0065. Or check us out online, listingsincharleston.com. A lot of great information on that website. We hope to see you there. All right, so Yahoo came out with an article earlier in the week, and the article is entitled, When Will the Housing Market Crash Again? And this is an example of how the media, and I understand the irony in this statement, by the way, but this is an example of how the media really just exacerbates everything. And so the title of the article, When Will the Housing Market Crash Again? The first line says, there are no signs the U.S. housing market is about to crash. In fact, the economic outlook and expectations for the real estate market nationally are positive for 2024. And then it goes on to say, which is a quote from Selma Heap, who's the chief economist at CoreLogic. She says, quote, unless there's a significant surge in the rate of unemployment, which is currently not in the forecast, the housing market is expected to continue to rebound from 2023 lows. Now, Loris Yun, who's the chief economist and senior VP for the National Association of Realtors, agrees that there are no indications that a housing market crash is imminent. He says there's a housing shortage and ongoing job creation. I would worry if there was an oversupply and if we were in a job-cutting recession, but that's not the case today. we'll talk a little bit in just a little bit about the jobs report that just came out literally a day after this article was posted. But it goes on to say that, some people think that, market crash is going to happen again based on the volume of sales that have been sluggish recently, which in reality we all know is a symptom of the affordability crisis in our housing market. And I've been talking about that for, really years at this point. If you follow the show, you know that probably once a month I go through the hard data and I talk locally about our affordability index, our increase or decrease in new listings, pending sales, closings, what's happening with prices, not just in our broader Charleston metro market, but in specific areas. So if you missed that, we're going to do that again here coming up next week, and that'll be for July's numbers. But there were about 4 million properties that sold nationally last year, which is the lowest it's been in 25 years. And I think we're right on pace to be at or around that number again for 2024. But that does not mean that all of a sudden sellers are now open and willing to sell their properties for 20 to 30% off. There will continue, this is a quote by Rick Sharger, there will continue to be demographically driven demand. The country has the largest number of young adults between the ages of 25 to 34 in its history, and demand, while sometimes weakened, still outpaces supply, which has led to home prices continuing to rise despite today's higher mortgage rates. Well, we've got two things that are kind of working against what they say are the two factors to worry about as it relates to a softening real estate market, and that's inventory and that's jobs. Inventory is up 30% from a year ago. It's up even more than that locally in specific markets. And you're seeing a reduction in the number of showings that we're getting per property per month, almost across the board in all property types and all locations and all price ranges. We're seeing properties starting to stay on the market for a little bit longer. We're seeing an increase in people deciding to put their home on the market. So what that's doing in connection with the reduction in demand and the softening of pending sales and closings is that we're seeing an increase in overall inventory, or what we refer to as month supply of inventory, which is kind of like how we measure the health of a real estate market. Now, in the years that were kind of leading up to the crash of 2008, we had an almost 13-month supply of inventory nationally. It got even higher than that. I think it was 2011 was when we had our highest month supply of inventory. I think we had a little over 11,000 properties, or maybe 12,000 properties available for sale at that point in time. We're still, at around 4,000 properties for sale at any given point in time in the Charleston area. So this article is interesting in that it goes on to say that if unemployment rose rapidly and homeowners couldn't afford their mortgage payments, they could lose their homes to foreclosure if they couldn't sell them. A large increase in foreclosures would bring down home values, leading to a potential home crash. Now, I've talked about this on this program, and one of the concerns that I have had for folks are those that got what we call a 2-1 rate buy down. So just bear with me for a second on this as I explain it. There are still, this program currently exists. It's not like it ever really went away. It's just it's gained in popularity over the past few years as interest rates have gone up and affordability has been a real problem for folks. So let's say that today's rate is 7%, right? Well, with a 2-1 rate buy down, what that essentially means is that you still have to qualify to purchase a property at a 7% mortgage. But your first year, it's going to be 2 percentage points lower, meaning your first year, your interest rate will actually be 5%. Then the next year, it'll be 6%. And then the third year, it'll reset to 7%. And the idea behind this 2-1 rate buy down and the attractiveness of it has been that there's this promise on the other side that rates will inevitably come down to a point where it will be easy for you to refinance. Prices will have continued to gone up, which means that you'll have enough equity to refinance and you can lower both your interest rate and your payment. The issue is if interest rates don't come down enough or quickly enough, then those folks that thought they would be able to basically afford a home at a 5 to 6% interest rate, even though they were approved at a 7% interest rate, they're going to have to stay in that home and wait longer for the interest rate to come down and for that home to be more affordable. So if they lose their job or if they have, economic distress, financial distress, it's going to be really tough for them to be able to sell the property, pay the commission and closing costs and everything associated with that, and pay for the move and everything else that goes into relocating yourself and or your family. And so you need at least, at a bare minimum, 10% in equity in order to just make sense out of selling and moving to another property. It really doesn't even pay for the move or the other property. That's, in the grand scheme of things, that's almost how much it costs when everything is all said and done just to sell the property between commissions, your personal closing costs, deed stamps, attorney's fees, property tax prorations, all of the above. And so the article mentions one more thing, which is that currently, and this is another quote from the chief economist over at CoreLogic, currently, what may be a concern for some markets is the significant increase in non-mortgage related costs, such as property insurance and taxes. That may be a bigger concern for households with fixed incomes who may choose to sell their home if they can no longer afford to make their payments. If a significant number of properties being listed as a result, that could dampen home prices and weaken a housing market. Nevertheless, with housing shortages still outweighing the impact of these additional expenses, a housing crash is not likely, especially a widespread one. Well, we know that locally, we have been hit really hard with the increase in insurance costs, and property taxes have gone up every year. It's not like we're getting a savings on property taxes, right? They just continue to go up. So, when you combine that, of course, with everything else that we have to spend money on and everything else that gets taxed, right? And we're going to go into keyword tax. We're going to talk a lot about that in this next hour. But you combine all of those things together, and there is a fairly easy, I think, narrative you can put together that states the housing market will weaken, at least in the short term. And I think, quite honestly, we're already there. We're already experiencing that to an extent. So I'm going to dive into that a little bit more when we come back. Stick around. This is the Brian Beatty Real Estate Show right here on the Big Talker, 1250 WTMA and WTMA.com. And remember, if you have questions about your property, your market, you're thinking of buying a home and you want to analyze a market, look for some opportunity, or if you're a seller, you want to determine how can I get the best price possible, it starts way before we put the property on the market. In fact, I have a guide that I've personally written. It's about 50 pages long. You don't have to read it all, of course. It's all segmented out. But it is the most comprehensive home seller guide in Charleston. So if you'd like a copy of that free guide, text the word guide to 843-800-0065. That's 843-800-0065. Text the word guide, which is also my personal number. You can call or text that. Or check us out online, listingsincharleston.com. So we just talked about what's happening kind of with the national real estate market. A little bit of a debunking of an article that asks when the next crash is going to happen in real estate. And it very well could, right? There are some legitimate, I think, issues, both economically, politically, that are going to impact the real estate market in a fairly big way here in the next few months, few years. We're going to dive into that really, really deeply as it relates to what the real estate world will look like, whether Trump is elected or like Harris, as an example, is elected. And so we'll get to that in just a minute. Of course, if you want to reach out to me, if you have questions about the real estate market, you're thinking of hiring a top real estate agent, I have sold about 1,500 homes here in the Charleston area, about $1 billion worth of real estate represented, and would love to earn your business. I'm still the guy that shows up and sits down with you at your kitchen table. So very rare these days to find teams where the person on the door is the person that comes to you. It's usually a junior agent. So if that's something you're interested in, 843-800-0065 is my number, 843-800-0065. Call or text me there. Check me out online, listingsincharleston.com. Check out our YouTube videos. Check out our podcast on iTunes, Spotify, Google Play, all that great stuff. But anyways, let's look at another article. I'm kind of looking at a lot of articles today, but offering my opinion on them. There was an article that came out from CNN a little earlier in the week after the jobs report came out, which just said that in July we added 114,000 jobs, which was significantly lower than what they anticipated. underscoring concerns, of course, that the economy has slowed down too quickly and could end up in a recession. The unemployment rate kind of unexpectedly jumped to 4.3%, which is the highest it's been since October of 2021. They were anticipating 175,000 jobs. We got 114,000. But this surprisingly weak report, which, by the way, it's only 1 month, and let's not read too much into it. But, it shows that there's, I think, increased fears that the labor market is not cooling gradually to kind of pre-pandemic levels. It's just weakening outright. And if you kind of, there's a really interesting opinion by the chief economist at the White House Council of Economic Advisors that says this is a treading water situation. We're in an economy where 100,000 jobs could mean a good thing or it could mean a bad thing. We could be talking about an economy that's at full employment, that's just settling into a long-run equilibrium, and that's a good thing. That's the goal. On the other hand, we could be talking about a labor market that is deteriorating, one where policymakers should be acting more concretely to intervene to help. And of course, that's a jab at Powell. But with this issue of the economy not being as supportive as we kind of hope that it would be, what I think will happen as a result of that is that we're going to see a rate cut in September. In fact, there's a bunch of articles out there already about people hammering Powell for not cutting it this month and that it's going to be too late. But I think we're going to see a cut in September. I have a lot of friends in just the financial industry in various sectors of it. And I think that overwhelmingly, my close friends believe that we're going to have one cut this year, probably a cut next year. But we're not looking at a situation where we're going to get down into the fives. And I think a lot of people are waiting on the sidelines for those interest rates to get back down to the fives. Now, you can modify the interest rate based on negotiations, right? You can ask the seller to contribute some of their equity to pay down your interest rate as a buyer on your mortgage. And that's always been the case. It's just that, you have to pick and choose your battles when you're negotiating a deal on a house, whether that's, do I try to reduce the purchase price? Do I need closing costs? Do I need to buy down my interest rate? What's important, right? It's different for different folks. But as this market softens, I think we in Charleston are experiencing it right now. And I've been talking about this for the past 2 months. And I think part of the test, so to speak, is my listings. I'm actively engaged in representing people to help them sell their homes and buy real estate. And so when you have your ear to the ground and you're I guess listening to data from a high caliber real estate agent that has a very intimate knowledge of this market, pricing and trends within it, when I have listings that are on the market and I am consistently shocked that they have not sold, that's not a good sign. Look at what's happening in other markets that are close to us, like Florida as an example. We're seeing price reductions left and right in Florida, and people are basically chasing the market downward, trying to find that listing price that's low enough to get the buyer's attention. It's almost like that market has shifted very quickly into a buyer's market. I don't think we're there yet. I don't think that it's going to happen quickly, but the trends show that we're headed in that direction, or in a version of what's a market like Florida is experiencing right now. And so we're keeping a very close eye on it. Of course, when we sit down with folks and we talk with them about buying a home or selling a home or doing both, right? Selling a home to buy another. This is why it's so important to sit down with a real estate agent and really make sure that you're asking the tough questions, but also using it as an opportunity to kind of ask yourself the question, does this person really get it, right? Do they really understand what's happening in the market? Because at the end of the day, it's all about positioning you for success. How do you make the most money possible on your real estate transaction? People always think about it in terms of saving money. I like to think about it in terms of making money. My skills, my 2-decade career, and the incredible amount of transactions I've done means I have the ability to save people money based on those experiences, based on those relationships that I have. And so again, if you're thinking of making a move, I'd love the opportunity to talk with you about that process, see if it might make sense for us to work together. Now, if you're a seller, again, get your hand on that guide that I wrote. I really poured my heart and soul into that one, by the way. And it's got a lot of information that you don't hear a lot of. Not necessarily trade secrets, but my experiences, things that have helped me sell properties for more money than other real estate agents. I mean, there was a point in time before COVID where 60% of the listings that I sold were previously on the market with another real estate agent before they hired me to rebrand the property, market it, and get it sold. So coming with a lot of experience from that perspective. But if you want your hands on that guide, 843-800-0065 is the number to text. You're going to text the word guide to 843-800-0065. Text the word guide to 843-800-0065, or check us out online. Visit us that way. We'll get a copy over to you. Listingsincharleston.com is the website. So here we are. We're going to talk about it. What is this world going to look like under a Trump administration or a Harris administration from a real estate perspective? I've got some information to share. I want to say before we get started that this is an opinion piece. I will also say that, if you look at, and there's plenty of articles that support this and dive deeper into these statistics, but there's some historical precedent as it relates to what happens to a real estate market the year after a presidential election. And the overwhelming majority of the time, prices go up. So I will say, though, that this is a blend of conjecture and fact, right? I think that I think we're in an unprecedented time right now. And so this opinion piece looks at it from two perspectives, right? What happens if the Democrats win? What happens if the Republicans win? So I think that, the differences start with the macro economic landscape, fiscal policies, leadership with government-sponsored enterprises, GSEs, the Consumer Financial Protection Bureau. Is that going to increase? Is it going to go away entirely? And then it gets down into the nitty-gritty. But it's basically, if you look at the issues, it revolves around two major things: affordability and the lack of available housing. As a nation, we are somewhere between, like 3 and I think it's like 8. I've heard the number 8 million housing units short of where we need to be right now in order to have enough housing for those looking for real estate. And so it's obviously been that way for the past almost 10 years, right? We've been in a seller-driven market for almost 10 years, hence this incredible amount of equity that we as homeowners now benefit from. But let's talk about what happens if the Democrats win. Now, there was a study that was done by Oxford Economics that says that if Harris wins, she's likely going to follow the Build Back Better program, which was Biden's baby, which is, border security, approving tax credits for low to middle income households. It could result in a slight increase in inflation, according to this study. But it also goes on to say that despite ongoing pressure on consumer prices, it looks like the era of interest rate hikes might be behind us. The Federal Reserve is likely to reduce the federal funds rate in upcoming meetings, which we all hope for, which would be a significant shift. And I don't think that matters as to whether it's a Democrat or a Republican that's in office, because both of them want the same thing, which is to tackle the issue of affordability. It's just how they're going to do it is going to be totally different. There's an agenda among Democrats for equity and fair housing and affordable housing. He mentioned that Eric Hagan, who's he's an analyst, anyways, for mortgage companies, and he mentioned that we might see guarantee fees cut for certain borrowers if Harris is elected. In the first 100 days, she might use government-sponsored enterprises, right, like Fannie Mae and Freddie Mac, to make a political statement that benefits lower-income consumers. Now, according to this study by Oxford Economics, if the Democrats gain control of the White House and both branches of Congress, we could see an estimated $143 billion investment into affordable housing through 2033. Some experts are saying, of course, that their focus, the Democrats' focus on consumer support, might exacerbate demand. You can either approach this from two different perspectives, right? The demand side or the supply side. And I think they're going to be much more interested in the demand side, right? Making things more affordable for folks. The question is, how are they going to do that? And who's going to pay, right? Who's going to pay to make it more affordable for everybody, right? Pay your fair share, level the playing field. Those are common words. They've talked about, as an example, Biden proposing a $10,000 tax credit for middle class families and lower class families who sell their starter homes. But again, they're going to have to be buyers. So it's going to continue to put pressure on the market. And of course, that credit might not even be approved by current Congress. But he also wanted a $5,000 annual tax credit for 2 years for middle income first time home buyers. And we've seen that happen before. Harris is advocating, by the way, for banning hidden fees and surprise late charges and taking on corporate landlords to cap unfair rent increases, meaning it's no longer up to the individual that owns the property. It's no longer up to the market. It's no longer a capitalist society, right? They're going to impose limits on how much you can increase your rent for, which to me is preposterous, right? If I own rental property. If I ask too much money, that property is going to sit there. And while it sits there, it costs me money. And if I'm asking too much for too long and I'm losing not only the cost to carry the property, but the loss in rental income, then I'm going to learn my lesson fairly quickly and adjust that price to something that renters will pay, right? That's just how free markets work. So, imposing a cap on rent increases, not a fan. There's, talking about Democrats, again here, likely to expand the housing ecosystem involving the Federal Housing Finance Agency, which is the FHFA, the FHA, which is Federal Housing Administration, Fannie Mae, Freddie Mac, Ginnie Mae. So we're talking about things like cutting insurance premiums, reducing fees, introducing new loan programs, and the CFPB, the Consumer Financial Protection Bureau, is going to continue its efforts against, junk fees, pushing to eliminate medical debt from credit reports, which I think would be a good thing, but it begs the question, is it realistic? I mean, that's a bill that needs to be paid that can have serious ramifications if left unpaid. And so should that be removed from a buyer's credit report? Curious to know your thoughts on that. But there's one big bill that was just introduced to legislation this week, actually, by Senator Elizabeth Warren, that would invest hundreds of billions of dollars into the housing crisis. And it's called the American Housing and Economic Mobility Act, which would hike estate taxes to fund the construction of nearly 3 million new housing units and to bring rents down by 10% for low-income and middle-income families, which they're using as an analysis from, I think it was Moody's that performed that analysis. But according to Elizabeth Warren, here's what she said. The only way to dig our country out of this housing crisis is to build more housing so everyone has a place to call home. My bill will make bold investments in our country's housing and encourage local innovation to lower housing costs even more. And it's all paid for by getting America's wealthiest families to chip in. That's how she ends her quote. And so if you go and you actually look at the summary of this act, it talks about all the things that she wants to do, like investing $445 billion into the Housing Trust Fund to build and rehab and operate nearly 2 million homes for low-income families. A bunch of other investments that she's discussing. You can read this online. It's available. It's the American Housing and Economic Mobility Act of 2024. It talks about providing assistance to people that were hurt by federal housing policy failures by providing things like down payment assistance for first-generation home buyers, VA guaranteed home loan eligibility for descendants of certain veterans, grant programs for communities with an appraisal gap, meaning if you owe more than your property is worth, you can pull from a trust as a get out of jail free card. That does not sit well, I think, with folks that have made wise, safe, financial decisions as it relates to something as expensive and important as real estate. And I think a lot of folks wisened up after what happened in 2008 and the years that followed. I know because I got licensed in September of 2006 was the first year that I sold real estate. And very shortly thereafter, I basically became extremely well known for short sales and foreclosure properties and working with investors, working with sellers to get them out of bad situations. There were over 100, I think, short sales that I negotiated personally between the seller and the bank to get them out of their mortgage, and they didn't know anything. Those times have changed. That process looks a little different these days. But when you look at this, American Housing and Economic Mobility Act of 2024, the very last sentence on this document says, to offset the cost of this historic effort, the bill returns the estate tax thresholds to their levels at the end of the Bush administration and sets more progressive rates above those thresholds. So let's think back, right? Right now, there's the federal estate tax, right? It ranges from 18 to 40%, and the threshold is $13.61 million. So in other words, if you die and you have assets that are worth $14.61 million, you're going to pay estate taxes on $1 million of your total estate. And of course, it's double that if you're married. And that payment's due within 9 months, right? So the Tax Cuts and Jobs Act of 2017 temporarily doubled the estate tax exclusion limit. Without that issue, without congressional action, that limit will revert back to the $5 million it used to be, which is indexed for inflation, at the start of 2026. So this bill that's being proposed by Elizabeth Warren that introduces hundreds of billions of dollars of investment into just the world of real estate is going to be paid for through estate taxes. And she wants to have those exclusion limits go back to what people used to pay at the end of the Bush era. Well, if we think back to 2006 to 2008, the exclusion limit was $2 million. So the quote unquote wealthiest families in America are the ones that have estates that are worth in excess of $2 million. And at least that's what I'm reading from this. And of course, from her perspective and from the Democratic perspective, everybody needs to pay their fair share. Well, everybody gets to receive their fair share, but not everybody pays their fair share, right? The folks in the upper echelon of the economy are the ones that are paying for it, and it says it right on the memorandum for the bill. It came out of her own mouth. So we're talking about what happens to the real estate market if a Democrat's in office or if a Republican's going to be in office here in November. So we've just talked about what happens if we're looking at a Democratic president and some of their tactics and what they're hoping to accomplish and how they're going to do it. Now we're going to talk about what it looks like under a Trump administration, because let's be honest, it's only Trump on the Republican side. And it's probably going to be him anyways. But let's talk a little bit about inflation. This study that was done by Oxford Economics states that if Trump wins, it could push up core personal consumption expenditures price index, which, by the way, is just a fancy way of saying that's how the Fed uses their inflation gauge. That's the name of it. They're saying that could go up by 0.3 to 0.6 percentage points in late 2027, early 2028, which could lead to a slowdown or a pause in rate cuts in 2026 and beyond. And so they're saying that a key factor here is what's going to happen with the Tax Cuts and Jobs Act of 2017, which we were just talking about. We were talking about how one of the benefits of that is that it increased the threshold on the estate tax to $13.61 million per individual for an estate. Well, that's all due and set to expire at the end of next year unless Congress takes action. And, while the hope, of course, is that those financial incentives are likely to remain. They'll probably get some tweaks. And one thing that Republicans are talking about, Trump is talking about, is indexing capital gains, which, by the way, has not changed since 1997, which would be a fantastic thing. I think Democrats want to get rid of something called a 1031 tax deferred exchange. And if you don't know what that is, let's take an investment property. Let's take a rental property, right? And let's say that you want to sell that property and then go and buy another property. Well, if you sell that property because it's not your primary residence, you're going to have capital gains that you're going to have to pay on that property, depending upon how long you've owned it and what your basis is and so on and so forth, right? We're not going to get into all of that. But I do have a fantastic article on my website that really highlights capital gains taxes, listings in charleston.com. But one of the ideas that the Democrats have, of course, is to eliminate the 1031 tax deferred exchange, which allows you to sell an investment property and have the equity from the sale be held in what's called safe harbor by a third party that then distributes that equity you've earned from the sale back to a closing attorney or a title company when you purchase the new property, thus avoiding or delaying, rather, capital gains, right? It's a tax deferred exchange of real estate. You're deferring the capital gains. You don't get to just eliminate it. You get to defer it. They're talking about doing away with that. It seems like, of course, both Republicans and Democrats are focused on affordability, right? They're focused on some tax incentives. They're focused on reducing the kind of lock-in effect that we've experienced for the past almost 2 years now with regard to folks that are sitting very happily in their home with a 3% mortgage. 3 out of every 5 people have an interest rate at or below 4% on the home that they own, which is amazing and good for you. And that's why, just a quick sidebar, back in like 2020, 2021, when the market was red hot, I was advocating and helping people try to understand that you are not going to win against a seller. There are too many other people that are interested. Who you are winning against is the bank. You're getting a sub 3% interest rate. It's free money. And looking back on it now, I bet a large portion of listeners were like, man, I should have bought something else. I should have bought a rental property. I should have really taken advantage of that time. Well, is what it is. But it seems like Democrats are more focused on tax credit driven solutions, whereas Republicans are more focused on things like capital gains related solutions. It says that, this article that I pulled said that industry experts believe that under a Republican administration, we'd see efforts to strengthen community banks for construction financing, which would be a fantastic thing because construction financing is so hard to find and so hard to get. For those that want to build a home, develop a neighborhood, so on and so forth. They're talking about investing in an apprenticeship program for trades like plumbing and carpentry, which is very, very, very needed. For every 2 people that enter that profession, 5 people exit. It's a real issue. So they're talking about creating apprentice programs for that. Talking about releasing federal lands for housing development. And given Trump's real estate background, there's a really good chance that he's going to go through everything with a fine-tooth comb and cut as best he can regulatory red tape and costs that make it incredibly expensive for builders to build. It's not that the builders don't have the appetite to do it. It's that the math doesn't work. The land is too expensive. The labor, the materials is too expensive. The fees associated with developing real estate are to the point where they're so burdensome, they just don't do it. That's a big part of the problem. And so, honestly, who better to tackle that issue than a developer, Trump? Now, regarding broader housing policy plans, we're looking at things like a significant reset of HUD, the U.S. Department of Housing and Urban Development. Maybe even getting rid of the Consumer Financial Protection Bureau, increasing FHA's mortgage insurance premiums. Really, all of this is being done so that we can kind of limit the FHA's role in mortgages, as an example, so that they don't encroach on private capital, right? They might not cut FHA-related premiums, like in mortgage insurance, or could narrow that credit box to encourage more private companies lending money on purchases, right? And so the idea is that under a Trump administration, there would be a renewed effort to exit conservatorship for these GSEs, right? These government-sponsored enterprises, and they also talk about things like junk fees and eliminate. They have a pushback on eliminating medical debt from credit reports because let's be honest, the U.S. credit system. I mean, don't get me wrong, it has its issues, and anybody that's a friend with a lender, a loan officer, will tell you it has its issues. But it's still pretty unparalleled globally. But I think a big part of their administration, of course, is border security, right? It plays a big part in this because where do these people live? We talk about this shortage in affordable housing. It's not like we're putting them in 5-star accommodations, right? There's also the issue of, the labor, right? Jobs that they have the ability to take that others are now unable to get. There's some serious issues here. So there you have it. That's the kind of breakdown on how the Democrats and the Republicans are looking at policies that impact the housing market. What I can say is that in our little corner of the world here in Charleston, South Carolina, our market is starting to soften. It has been for the past, call it 2 months at least. And we're going to watch that really closely. This next show is going to really dive into some data that I think supports my opinion. And we'll go from there. But of course, every location, every price range, condos, townhomes, single family homes, they're all different. They have factors that apply to them only that you need to be aware of and talk to a professional to help you understand so that you can make some informed decisions. And so if you'd like to sell your home, you'd like to buy a home, invest in real estate, have a property you'd like for us to manage for you, or just want to talk shop about real estate, feel free to give me a call, 843-800-0065. That's 843-800-0065. Check out our website, listingsincharleston.com. Check us out on YouTube. And we hope you guys have a great weekend. Thanks for listening.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Find him online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-800-0065. That's 843-800-0065.